Hey everybody, my name is Albert Corey from the Entrepreneur Success Academy, the tax man. For over 35 years, we've been assisting our clients to make sure that they get the best, how to open up their company, the best way to put more money in their pockets consistently. So today we're going to talk about how the wrong entity will cost you money. That's right. We're going to show you what you can do, the types of corporations, and we're going to show you real quick the good and the bad and the ugly of every single one. Make sure that we're here. Making sure we're hot everywhere. All right, so now on with the show. We're just using Zoom, doing something different today. So let's see if you can see the show here. Desktop number 1, desktop number 2. Oh, and I just messed up. Just give us a second here. There you go. See if we got that rocking. So anyways, the wrong entity will cost your money. See what you can do now. First of all, I'd like to welcome you to the webinar. This is a webinar in a bunch of series. We're launching the Entrepreneur Success Academy. And this is going to be one of many videos that you're going to get to learn and find out how you can go out and save money and build your business. You know, I'd like to welcome you. If you're watching this on Facebook or Instagram, you are always welcome to share. Sharing is caring, and that's what we're here for. So let's start going over. Who am I? Since 1985, we assisted. Let's try this. Oh, this is new. So by the way, this is the first time I've done Zoom, so we're gonna. All right, let's see how that worked. There you go. Since 1985, we've assisted over 5,000 small business owners to get started. I've been on covers of Entrepreneur Magazine and Endeavor. Small business, we've been giving small business advice for startups since 1985. And we always talk about how businesses can increase their bottom line. You know, I've spoken on the Business Expo tours last year with Bill Walsh. I've had like I said, over 35 years of experience. But guess what? I've been doing accounting since '85 and helping clients. And I started in '85 when my parents came out of college, could not get a job. So I started cleaning toilets for my parents and their motel. And the next thing you know, I was working H&R Block and learning, and now I'm here to give everybody the knowledge and wisdom to start building their business. So our first episode today is going to be we're going to go over the four business types. I mean, there's really 5, but we're going to go over every one of them today, and we're going to show you the good and the bad of every single one. So now, the first one we're going to start to talk about is sole proprietor. The 5 types of corporation you can open is sole proprietor, DBA, LLC, corporation, and sub-S corporation. Like I said, we're going to start to go over every single one. So the first one we're going to go over is sole proprietor. The good thing about sole proprietor is anybody can just start a business, guys. You just go out, make some business cards, make a flyer, you're in business. All right, you're in business. That's it. Doesn't cost no money. You're in business. So that's the good side. The bad side is a couple of things is you're going to pay more tax. Even doesn't cost any money, When you start getting those 1099s, you're going to have to pay more tax on the return. All right. And if you show a loss, okay, you really can't really show, you can show some of a loss. We've been doing this for 35. You can show some loss, but your losses could be limited because it's going to be on your personal return. And if you see it on the, and the IRS can also see it on a personal return. So if you're starting a business, all right, and you're doing Amazon, eBay, and you have a really heavy startup cost, you can only put a fraction of it, of the loss. And this is especially helpful if you're a single guy or people making 100,000 plus. If you're married, probably single people, I saw it today. If you're making like 50 or 60,000, everybody needs a side hustle in this new business. And sole proprietors are some of the easiest way to get into it. So it's like all of a sudden you start doing an eBay store, selling at flea markets, any MLM deal, realtors, you know, they all start off as sole proprietors. So that's the good side. Like, as good side doesn't cause anything, bad thing, you're exposed. If something happens to you, you know, it's open. Okay, it's open to you and they can come back to you. Now, the second thing we're going to talk about is DBA. A DBA is doing business as. It's a fictitious name. All right, that's really what it is. It really, really, really doesn't do anything for you other than change the name. So let's go back to sole proprietor. So if you don't want to open up a corporation, which costs money, or LLC, you can go on your state and just go make up a name. What's cool about DBAs is that there really no restrictions. You probably can't, if I'm doing H&R Block, put a really trade name, but as long as it's not a trade name, you can go out and do it. So you can pick out any name. You could be yourself like Albert Corey. I can go by the DBA, that tax man, and put on my business cards, the tax man, everything, and you'll be okay. The bad side is anybody can come in, open up a corporation, anybody come in and try to do trademark infringements. So you gotta kind of be careful about this, but you really have no, that is like, they have no advantages of a DBA other than changing the name. The next thing we're going to talk about is an LLC. An LLC is simple, a limited liability partnership. So what does that mean? The good side is it gives you protection for your business. So meaning if you open up an LLC in your state, it costs money to open up. The good side is that you're going to kind of protect yourself if you set it up right. You can have unlimited income, unlimited partnerships. Okay, unlimited income, unlimited partnerships. The bad side is obviously it's going to cost money to open up. Sole proprietor doesn't cost anything to open up. Depending on the state, okay, you could pay state income tax, so you got to check that out. Okay, that's one thing on LLC. The another problems on LLCs is that most of the time people are opening them up as, when you open them up, people think, oh, I just go open up the state, open it up, next thing on, you're an LLC. That's kind of wrong, because what starts to happen is single member LLCs goes directly to your tax return. So if you make a profit, it's like having Social Security tax automatically paid. If you have a loss, it goes almost like being a sole proprietorship. It goes on Schedule C. Schedule C is like the business form when you don't have any corporation. When you don't have any type of corporation, it goes on your business form. It goes on Schedule C. It's like having your own personal business. So LLC, but the good side of an LLC is if you get the partners, which is cool, and you're going to start having real estate over $250,000. Well, I'm in the Miami area, guys, and it doesn't take enough. It doesn't take much to go over $250,000 in the Miami market. You know, very condos and everything go over. But the cool thing about when you have it on the condos is obviously you won't have to pay Social Security tax. They will also protect you. How it's going to protect you is if it's done right, you set it up right, you get a bank account, and you pay everything right. I'm not no lawyer, so any legal advice, you go out and see a lawyer. So I'm not a lawyer. Let's do that full disclosure. So you open it up, and then once it's opened up, now if something happens to you, they can't come back to you personally. If you don't pay the bills on that company, they can't come back to you personally. Good example. You go and rent a storefront to go start a business. You open up the business, COVID or something happens, things go south. You gotta close the business because you're not making any money. You gotta go out. If you have an LLC, okay, and it's done right, where you would have two partners and the person can't come back to you, they can't come back and sue you and try to get the money off you. As a sole proprietor, okay, or DBA, if you didn't pay your rent, they can come back and sue you, put judgments. On an LLC, they can't come back and get you. They can't because it's a company, but you have to always show it's a valid company. How do you show it's a valid company? You put money into the company, you pay the bills. I think the easiest way is just make sure you put money in the account and you write checks against it, and that's going to show that you're valid. So if you put credit cards in it, you pay your car out of it, and something happens, they can't pay for it, you can't pay for it, it's not going to go back to your credit or they're going to sue you. Another good thing about an LLC, once you get the two partners going, is if you're doing a startup business and like say COVID, you start to lose money, the loss will transfer over to your personal tax return. Okay, it's going to transfer over to your personal tax return. That could be good because if you have shareholders, that shareholders can be passed around to shareholders, and it's going to help reduce the amount of tax you got to pay. We can share this again. Oh, give me a second. We can share this. Okay, we just shared it out. So, by the way, anybody's joining to the other groups, thank you. You can always post comments below and we can get back to you. So we're talking about, my name's Albert Corey. We're now starting the Entrepreneur Success Academy. If you have any questions or comments, you can always leave it below. And if you stay at the end, I'm going to have some unannounced gifts. So please stay at the end so we can give you some cool gifts. So getting back to the LLC. Another good part of the LLC, and we'll recap it, is you can now have foreign investors. You know, I have a couple of companies that I manage and help where you have people owning shares of your company that don't have Social Security numbers. That's really important if you're getting foreign investors. The next two, you can't really do that. So that's pretty cool. And the profit and loss transfers over to your personal tax return, which makes it simple and easy to do. The next thing we're going to talk about is a corporation. Corporations are pretty much, let's go over, the good side is, once you open up the corporation, part of the good side is of having your corporation open is, it's kind of like an LLC, is that if you open it up, obviously if something happens to you, okay, something happens, like say you can't pay the rent of your office, you can't pay the credit cards in the name of the corporation. If you really maintain it, and maintain it means you put money into your business, okay, you put money into the business account, and obviously you take it out to pay your credit cards, you pay your credit cards and you pay your bills, then they can't come back after you. The problem is with corporations that I never recommend a corporation straight out is that okay, that the profit, if you make a profit, you're going to make 25% profit. So in simple terms is if your company even makes $1, that corporation has to pay tax at not only at two levels, even it's funny things about this, even if you're in a state like Florida, which is pretty funny, that if you have a corporation and if you make $1, okay, if you make $1, state of Florida is going to make you pay tax on that dollar. And obviously, if you're in your other states that are high tax, like New York, New Jersey, and most of the other states, you're going to pay a lot of money on the tax. And one of the bad sides is of a corporation is if you have a loss, the loss can't be transferred back to you. That's it. So if you have a corporation, I ran into somebody last year, and their logic behind having a corporation is they thought it was better to pay the 25% tax, no matter how much you make on the company, than putting on your personal return as an LLC or sub S company. That's debatable. I guess the only time that would work if you're making, like $600,000 and your company and your husband's making that kind of money. So I guess if you add it together, you're paying a lot. So that's probably the only other time. That's probably going to be the only other time that it's that it's really, really important. Now, the last one we're going to talk about, this is my favorite one, is a sub S corporation. A sub S corporation, and I'm going to explain how you do that in a couple of minutes. So what happens on our sub S company is you got to go in your state and open up a corporation. Now, once it's done, you open up a corporation, you then go to the IRS and you got to click when you go get an employee identification number, you then click the button that says EIN. All right, but you got to put the one that says sub S, you get the number. So now once this is done, you then have to go out and fill out one form. It's called a 2553. It's very simple to do. You pretty much put the EIN number at the top, you fill it out. On the second page, the officers has got to elect you to do it, which is very simple. Here is the good side of the sub S company, is you only need one partner. That's right, only one person. So now you can be a party of one, and you're going to get almost all the benefits of having your corporation. You can take all the profit, all the loss. The only kind of difference that happens is you can only make up to $249,000 and have 14 shareholders. It's not always that good if you're going to start off with real estate, because depending on what type of where you are in the country, you're going to go over the limitations real quick. I've always recommended it for my clients who are just very, very early startups, because there again, you don't need a lot of partners. So that's very good. Another secret trick that most people don't know is if you opened up an LLC. Okay, if you opened up an LLC, all right, and after you open it up, you started talking to me, you realize you can file a 2553. That would make you as a sub S company. That's pretty cool, because in the rest of the world, you're an LLC. To the banks, to the rest of the world. But to the IRS, you're just a single person. So now you don't have to ask your wife for that 1%. By the way, if anybody has any questions or comments, you could always leave it below. Oh, sure. Wait. So now you don't have to ask your wife for that 1%. Just made a mistake. Sorry, try to check the comments and well. So, always have technical stuff, but this is a live show. So that's pretty cool. By the way, if anybody questions or comments, this is on our Facebook page, but leave a comment below. When it's on YouTube or LinkedIn, wherever it shows up, always leave a comment below and you can get back to me. You could always find us, and I'll put it at the chat. You can get a hold of everything we do by going to Albert C360. That's ALBERT C360. There you're going to have our LinkedIn page, our Facebook page, Instagram, how you can get a 30-minute free call. You can buy our book, The Perception System. You can buy our book, The Perception System. So everything, you can find everything Albert Corey, Entrepreneur Success at Albert C360. Remember, I always tell people, sharing is caring. So you could always please post it below and we're going to get back to you. And thank you. And any questions or comment, leave it below. Talk to everybody soon. Bye-bye. Where's the end?